Hello everyone, this is Group 4, Marilyn, Mackenzie, Charles, and Aidan. Today we will be presenting on Nvidia, specifically their growth and financial challenges, as well as how they position themselves as a global leader in AI and emerging technologies.
First, we'll talk about the AI bubble and market security for Nvidia. First off, the stock prices took a big jump last year, but then they fell off by 16% just in a few days, which that just kind of shows the potential with AI is up. It'll keep increasing. There's been research done that it's not going to be going down anytime shortly. The shares are being sold though, just due to the fact that tariffs have been placed, regulations are in place, making it more difficult for Nvidia to get their business done, which scares the stockholders. And then also industry value will just always increase. Anything in electronics, it is the future. It's not going away. But Nvidia unfortunately is suffering a lot from regulations due to the fact they do almost all of their production overseas.
Next, we'll look at margin pressure and increased competition. As of 2025, Nvidia holds over 80% in market share in the AI chip market. However, this could change, because according to Del Oro, global data center capex is estimated to reach $1.2 trillion by 2029. With this in mind, the competition to make AI chips cheaper, more efficient, and more available is increasing. And Nvidia is not going to be able to take this one lying down. They have to compete with multiple different companies, including AMD, who is their very distant but still prevalent second place runner-up. Also, many companies and even countries are trying to create their own AI chips. For instance, Google and Tesla have invested billions into creating their own chips. To continue, Meta, Amazon, Alphabet, or Google, Tesla, and Microsoft have begun investing heavily into their own designs of AI chips. In fact, 35% of the S&P 500 is from these companies investing in their AI chip manufacturing. On top of that, countries from all over the world are beginning the process to develop their own AI chips so that they don't have to rely on other countries to create their processors. Also, Nvidia's main competitor, AMD, has partnered with OpenAI, the creators of ChatGPT. This could create billions of dollars in revenue by 2027 for the AI giant and the AI chip manufacturer. As competition to increase the efficiency and decrease the cost of these AI chips, Nvidia has a lot to be concerned about. For instance, AMD, Google, and Tesla have developed their own chips that compare to Nvidia's. A major example is AMD's MI450. They have actually been shown to have a higher efficiency compared to Nvidia's. Another example is their new MI355, another model from their MI series, which matches the performance of Nvidia's GB200. AMD is working diligently to make this cheaper than the GB200, which would allow them to gain a foothold in climbing the ladder as an AI chip giant. With all this being said, and with their partnership with OpenAI, by the year of 2028, AMD is expected to surpass $500 billion.
For some background on Nvidia's supply chain and manufacturing, they have a heavy reliance on external foundries, primarily TSMC, for advanced chip production. They have a limited number of global manufacturers capable of producing their specialized designs just because it is so highly advanced. They have a high exposure of capacity shortages, geopolitical tensions, and natural disasters. They also have a dependency that limits their control over production timelines, efficiency, and cost structure, and this can lead to a potential risk because of their highly dependent nature. They produce specialized components, and they also remain in short global supply just because it's so highly advanced and it is a very niche market. This also can lead to bottlenecks, which can disrupt output, delay deliveries, and increase manufacturing costs. Now moving on to production risk and competitive pressure. Nvidia produces highly advanced AI chips that are rare premium components and have minimal supplier competition. Supplier constraints can limit Nvidia's ability to meet fast-growing market demands. Potential manufacturing challenges create risks of delays, elevated costs, and reduced responsiveness. Potential competitors closing this technical gap increase pressure on Nvidia's production efficiency. Any disruption from this could result in a loss of competitive advantage within such a niche, rapidly evolving market that Nvidia is in. Combined manufacturing and supply chain issues pose significant risk on Nvidia's sales, especially financially.
Moving on to geopolitical and regulatory challenges Nvidia is facing, President Trump put export restrictions into place that prevented Nvidia from selling one of their AI chips to China. This chip was specifically designed for the Chinese market, so it was quite a hit for the company. In the first quarter of 2025 alone, Nvidia lost $4.5 billion in inventory and $2.5 billion in sales. They did strike a deal with the government that export was allowed with licensure for a fee of 15% revenue of chips sold. And with this implication, Nvidia is expected to incur revenue loss between 2 and 3%. While this isn't a humongous amount for such a profitable company, there are extra costs associated with licensure, and changing policy could delay production, manufacturing, product delivery, which furthers the friction between the United States and China. Overall, imposing export restrictions on Nvidia's chips reduces the company's market reach, sales potential, and therefore revenue, which long-term could absolutely hurt the company financially. Another geopolitical risk Nvidia faces is excessive reliance on Taiwan semiconductor manufacturing, the main producer of their AI chips. This leaves Nvidia vulnerable to foreign trade policy and regional volatility. The company has begun diversifying production, creating partnerships in Malaysia, Vietnam, and India. And while this does successfully expand production, it could hinder profits short-term by way of transitional costs. Politically volatile areas have the ability to sway supply and demand heavily, potentially forcing Nvidia to sell product cheaper than planned or pay more for raw materials and manufacturing overall. In the long term, this could severely hinder their profit. A regulatory challenge that Nvidia is facing is being accused of antitrust violation. An investigation was conducted by China following the Mellontax acquisition in 2020, leading to an initial discovery of antitrust violation regarding their chip supply commitment. Shortly after, the European Union voiced their suspicion of monopolization, noting that the company has 80% control of the AI chip market. These accusations could be detrimental to the company. Legal fees and fines could be costly and affect the company's reputation, altering investor opinion and therefore lowering the stock price. These accusations could also hinder the ability to maintain market chokehold if forced to break up the company or restructure. Overall, these accusations could be financially detrimental to the company and alter their reputation permanently. Ultimately, Nvidia is facing financial challenges on several fronts, which has investors concerned. Following the Michael Burry comments regarding an AI bubble and questionable long-term investments, we saw the stock price drop 2.2% within about a month. In a rapidly growing competitive market with the partnership between AMD and OpenAI, trade restrictions, antitrust claims with control of over 80% of the market, and heavy reliance on TSMC could prove detrimental to the company. Nvidia has proven to be a formidable force, and their strength is being put to the test. Only time will tell if Nvidia has the strength to adapt and endure.